Microsoft MSFT has received accolades for its smooth transition from desktop to cloud computing. As a result, MSFT stock has soared. Many investors may be asking whether Microsoft stock is a good investment at the moment. Welcome to Upstep Financial, where we'll teach you everything you need to know about today's most popular MSFT stocks. But first and foremost, please subscribe to the channel and turn on the notification feature to notify new uploads. Microsoft was founded in 1975 by Bill Gates and Paul Allen to create PC operating system software at the commencement of the personal computer age. Windows, the company's operating system, emerged to dominate the PC market. Microsoft has grown to include Office software, server software, internet services, video games, and PC hardware and accessories over the years. Azure Infrastructure Services, Office 365 productivity software, and Dynamics Enterprise software are among the company's current cloud products. LinkedIn, Skype, and GitHub are all owned by Microsoft. The company's June 24th event to showcase what's next for the Windows operating system could be the next driver for Microsoft stock. Analysts anticipate Windows 11, the successor to Windows 10, which was released in July 2015. In other recent news, Microsoft agreed to pay $19.7 billion for Nuance Communications, or NUAN. Microsoft will gain additional clout in the healthcare sector as a result of its acquisition of Nuance. On the announcement, Microsoft shares gained a smidgen. On March 31st, Microsoft was awarded a contract to equip the U.S. Army with over 120,000 Microsoft HoloLens augmented reality headsets. Microsoft won a huge cloud computing deal from the U.S. Defense Department in October 2019, beating out Amazon.com, or AMZN, which was widely favored. The JEDI, or Joint Enterprise Defense Infrastructure, contract is valued at $10 billion over 10 years. Amazon has filed a lawsuit challenging the contract award. The Pentagon is considering scrapping the JEDI Convention, according to the Wall Street Journal on May 10th. Amazon Web Services, a subsidiary of Amazon.com, is the world's largest provider of cloud infrastructure services. According to research firm Canalys, AWS earned a 32% market share in the first quarter. With a 19% market share, Microsoft was in the second position. Other prominent cloud players include Google Cloud Platform, which is owned by Alphabet GOOGL, as well as Alibaba, or BABA, and Tencent in China, TCEHY. According to Canalys, overall enterprise spending on cloud infrastructure services hit $41.8 billion in the first quarter, up to 35% year over year. Microsoft introduced 3 new industry-specific cloud products on February 24th. Microsoft Cloud versions for financial services, manufacturing, and charities were among them. It also gave a sneak peek at Retail Edition. It also included the first Microsoft Cloud for healthcare upgrade. The shares of Microsoft increased by 0.6% as a result of the announcement. In 2020, Microsoft Corporation, or MSFT, shares rose over 44%, while the S&P 500 increased around 8%. The stock's rise coincides with a shift in how people work and collaborate due to the coronavirus pandemic, with more individuals working from home. Microsoft sales and earnings have increased due to this trend. The company's market valuation has risen by about $500 billion to nearly $1.7 trillion this year. Despite the significant increases, someone is wagering that Microsoft stock would cool off or even plummet shortly. Microsoft 1-year around PE ratio has risen to nearly 30, the highest it has ever been. Because of the significant gains, someone is hedging a long position or betting the stock will collapse using options. The open interest for the September 25th $215 calls increased by over 16,000 contracts on August 26th. In addition, genuine interest in the September 25th $205 has risen by almost the same amount of contracts. According to the data, the $215 calls were sold for about $7.96 per contract, while the $205 were bought for about $300.41 per contract. It established a spread transaction and a bet or hedge that the stock would fall below $205 by the expiration date in September, a drop of roughly 11% from its current price of around $222 on August 22nd. In 2020, the stock witnessed considerable multiple increases, with the PE ratio climbing to about 32 times fiscal profits forecasts for the following year. With the 10-year yield plummeting below 1%, the low interest rate environment is part of the rationale for the quickly rising PE ratio. Specific investors have noted the significant difference between Microsoft earnings yield and Treasury rates. The earnings yield would have to fall to narrow that spread, causing the stock price to rise and sustain the higher earnings multiple. Please subscribe to the channel and share this video with your friends interested in the stock market before we reveal the pros and drawbacks of MSFT stocks. The benefits and drawbacks of investing in Microsoft. Benefits in investing in MSFT stocks. Its cloud business is expanding. After missing out on the smartphone revolution, it appears that Microsoft was resolved not to miss out on any future technology endeavors, and its investments in this area have played a vital role in the company's rebirth. One of its most notable achievements has been its push into cloud computing. According to critics, Microsoft controls only 15.5% of the cloud computing business than Amazon.com Incorporated, which holds about 47.8% of the public cloud services market. Microsoft Cloud business, on the other hand, is growing at a quicker rate. Microsoft's cloud revenue jumped by 75% to $3.4 billion in the first quarter of 2019, according to research firm Canalys, while Amazon Web Service sales increased by 41% to $7.7 billion. It's important to note that Microsoft's revenue is rising faster in a market expected to expand significantly in the future year. MSFT has a strong earnings track record. A string of favorable earnings reports has fueled the bullish trend in MSFT stock. The company has beaten earnings predictions in each of the last 3 quarters, outperforming them by an average of 11.57%. Even Wall Street analysts have been undervaluing Microsoft's earning potentials as a result of the translation. As a result, MSFT stock is anticipated to continue its bullish run if the trend continues. The drawbacks of investing in MSFT stocks. Microsoft does not fare well during economic downturns. Predictions of an impending recession currently dominate the financial markets headlines. If we are going for a downturn, Microsoft stock near-term prospects appear dismal, as the firm traditionally struggles during downturns. Between 2008 and 2009, the supply of Microsoft lost over 60% of its value. And like a decade ago, its software division still accounts for the majority of the company's revenue. A recession may not be kind to the software behemoth. Overall, though, the MSFT has a solid buy recommendation due to its remarkable earnings growth. It's a startling assertion that the most significant risk associated with Microsoft stock is simply the typical volatility that comes with investing in equities. Astonishingly, a corporation of its magnitude doesn't have major legal or antitrust issues or fierce competitors threatening its bread-and-butter revenue cow. Instead, its financial soundness is virtually inextricably linked to the fact that it is deemed safer than U.S. bonds. Microsoft has a massive moat in an industry that will most likely still be around a decade from now, and it pays a minuscule 1.05% dividend at the time of writing. That's a little more than the 10-year Treasury, which is currently yielding roughly 0.8%. So suppose you can sit on your hands with 10-year treasuries. In that case, you might as well purchase Microsoft stock and hold it for a decade instead. You'll get the dividend and probably some significant capital gains, unless something goes tragically wrong or Nadella changes its inner Balmer. When it comes to risk versus reward, Microsoft is an outstanding stock to invest in. Future of MSFT stocks. The ability of the company to continue to drive earnings growth in the future will determine whether or not the stock can continue to increase. Analysts predict that the company's earnings will increase by 12% in 2021, 13.6% in 2022, and 13.4% in 2023. The stock's present high earnings multiple cannot be justified only based on its earning growth rate. As a result, the corporation must continue to outperform expectations and deliver upward forecasts. Microsoft stock has been on a tear over the last few months, and even if the shares do pause and reverse lower, as some traders worry, the stock will continue to rise. In a climate where more work is expected to be done at home than in the office, the company is nevertheless well-positioned to succeed. If the stock's long-term growth story holds, it should be rewarded whether interest rates are low or not. That's all there is to know about MSFT stocks. We hope it was worthwhile. Please remember to like, share, and subscribe to the channel and turn on the notification speaker. Upstep Financial here, and we'll see you in the following video.